Warren Buffett, the investment wizard who took us all on a roller coaster ride when he flipped the script from being Apple's #1 fan, packing nearly half his portfolio with their stocks, to suddenly letting go of a cool $2 billion worth. What's up with that? Was it a change of heart, or is there more to the story with his longtime tech darling? And the million-dollar question, how does Buffett pick the winners for his investment lineup? Jump into this adventure to explore Buffett's roller coaster relationship with Apple and unlock the magic formula for creating your own stock portfolio gold Buffett style. Don't miss the ride, watch till the end to get the full scoop. Warren Buffett, known as a super smart investor and the boss of a big company called Berkshire Hathaway, usually sticks to investing in businesses he knows well and can predict, like banks or insurance companies. He wasn't much into tech companies because they change too fast and can be hard to predict. But he made a big exception for Apple, the company behind iPhones and Macs, which turned out to be a really smart move. Back in May 2016, everyone found out that Buffett's company bought a big chunk of Apple shares, worth about $1 billion. This was a bit of a shock because Buffett usually avoided tech stocks. But he didn't see Apple just as a tech company. He saw it more like a company that makes products people love and keep buying, kind of like the other products he likes to invest in. What really caught Buffett's eye about Apple wasn't their techie side, but how they had a bunch of loyal customers and made a lot of money from selling their products and services. He liked that Apple was really good at making cash and giving some of it back to its shareholders through dividends. That's a share of the company's profits and buying back its own shares. As time went on, Buffett liked Apple more and more, and it became the biggest investment in his company's portfolio. He really believed in Apple's team, their ability to come up with new stuff, and how much people depended on their products in their daily lives. Buffett's move to invest in Apple shows that even though he usually sticks to what he knows, he's also smart enough to spot a good deal when he sees it. It teaches us that it's good to invest in what you understand, but also that sometimes companies that are really important to how people live can be great investments even if they're a bit outside what you usually look into. But what are Buffett's thoughts on how to form a perfect stock portfolio? And what advice does he give to those who are just starting out and trying to understand which stocks are worth investing in? First off, Buffett says stick to what you know. It's like choosing between playing a game you're good at versus one you've never tried before. If you understand a business, like how it makes money and what could affect its profits, you're more likely to make smart choices about investing in it. He also talks about finding companies with a moat. Imagine a castle with a moat around it. That moat protects the castle from attackers, right? In the business world, a moat is anything that keeps competitors from stealing a company's business. This could be a super popular brand, a product no one else can make the same way, or even laws that can make it hard for new companies to compete. Companies like Coca-Cola, with its famous brand, or Apple with its die-hard fans, are Buffett's favorite because they have strong moats. Buffett believes in betting on companies run by smart, honest people. It's like picking a team captain who's not only good at the game, but also plays fair and works hard. A great team led by a strong captain is more likely to win, just like a strong company led by good management is more likely to succeed. He's also a fan of zigging when others zag. When everyone is freaking out and selling their stocks, being fearful, that's when he gets excited and starts buying, being greedy. And when people are buying stocks like crazy, being greedy, he takes it as a sign to slow down and be careful, being fearful. It's all about being smart and not following the crowd. Lastly, Buffett is all about playing the long game. He's not into buying stocks one day and selling them the next. He prefers to buy stocks in companies he believes will do well over many years, even decades. In short, Buffett's advice is like a recipe for success in investing. Know what you're buying, look for companies that can keep competitors at bay, invest with smart and honest leaders, be brave when others are scared, and stick to your investments for the long haul. Warren Buffett is all about making smart money moves that pay off big time in the long run. He's usually into old school stuff like insurance or energy companies because they're steady and reliable. But then he did something unexpected. He went big on Apple, the company that makes all those gadgets we can't live without. This was a pretty big deal because Buffett doesn't usually go for tech companies. Apple's got this magic combo of cool products and super loyal customers, which made Buffett sit up and take notice. He started buying Apple shares back in 2016, putting down about $1 billion. That might sound like a lot, but it was just the beginning. Thanks to picking up more shares over time and Apple's stock price going up, Berkshire Hathaway's stake in Apple got huge. By 2021, they owned over 5% of Apple, and that piece of the pie was worth over $120 billion. That's a lot of dough, making Apple the biggest single investment Buffett had made. The more Apple grew, the bigger its slice of Buffett's investment pie got. Apple's been killing it in the market with its value hitting the roof at over $2 trillion in 2021. Yeah, you heard that right. Trillion with a T. They rake in billions every year, proving they're not just about making cool stuff, they're also about making serious cash. Buffett betting on Apple shows he's got the chops to see the gold mine in tech, mixing up his game and going where the money is. This move isn't just about Buffett getting with the times. It's about him seeing how Apple's at the top of its game, making stuff people can't seem to live without, and then making bank from it. Buffett's knack for picking winners like Apple tells us something important. Being willing to change and go after new opportunities can lead to hitting the jackpot. It's all about spotting those unique companies that have what it takes to stay on top no matter what. And with Apple's value expected to keep climbing in 2024, surpassing $3.5 trillion worth, it's clear that Buffett's big bet on Apple is the gift that keeps on giving, showing the world he's still a master at the investment game. Warren Buffett once said Apple is the best company he's ever been involved with. That was at a big meeting for his company, Berkshire Hathaway, last May. Right now, Apple stocks are the biggest part of Berkshire's investment portfolio, showing Buffett really believes in Apple. But interestingly, he sold almost $2 billion of his Apple shares by the end of last year. By the end of the year 2023, Berkshire had 10 million fewer Apple shares than they did in September, according to official documents. But there's no need to worry about Buffett and Apple not getting along. There's a good reason why he sold some of his Apple shares. It wasn't just Apple shares Buffett sold last year, he was selling a lot of different stocks. In the first 9 months of the year, his company sold $32.8 billion worth of stocks but only bought $9.1 billion. Buffett had many reasons for selling off some stocks and completely getting out of others, and you can't ignore the tax stuff involved in these decisions. Berkshire Hathaway talks about how it owes taxes on the profit it hasn't cashed in yet as a debt on its balance sheet. But they don't actually have to pay these taxes until Buffett or another one of their investment managers sells the stocks and makes a profit. By the end of September, they said they owed about $85 billion in these future taxes. The sales of stocks earlier in the year made them a profit of $5.4 billion. Buffett kept selling stocks in the last part of the year, with HP and Paramount Global being the biggest ones he sold off. Buffett cut down 78% of his investment in HP, a move he started in the third quarter. He also reduced his investment in Paramount by a third. This was a big drop compared to his initial investment in 2022 when the shares were worth more than $30 each. It's clear that Buffett's bets on these two companies didn't pay off as he hoped, but he's open about admitting when he's wrong and taking his losses. Selling these losing stocks led to big losses that can help balance out the profits in Berkshire's portfolio. So, Buffett was looking to make the best out of a bad situation by making some money off his winning investments.